Australian dollar to US dollar weakness to persist on failure to defend monthly range. Australian dollar to US dollar gives back the advance following the lackluster US non-farm payrolls report, as the total number of COVID-19 cases in Australia climbs above 1 million. And the reversal from the December high may gather pace if the exchange rate fails to defend the opening range for January. Advertisement AUD/USD approaches the monthly low even as Australia Prime Minister Scott Morrison looks to avoid another lockdown as the Omicron variant is likely to put pressure on the Reserve Bank of Australia to further support the economy. PM Morrison argues that Omicron is a gear change and we have to push through while speaking in Canberra, and it remains to be seen if the RBA will relay a similar message as the central bank is currently on track to purchase government securities at the rate of $4 billion a week until at least mid-February 2022. The uncertainty posed by the Omicron variant may keep Australian dollar to US dollar within the December range, as the RBA remains committed to maintaining highly supportive monetary conditions to achieve its objectives of a return to full employment in Australia and inflation consistent with the target. But the Australia dollar may face headwinds ahead of the next interest rate decision on February 1 as Governor Philip Lowe and company pledged to not increase the cash rate until actual inflation is sustainably within the 2 to 3% target range. Until then, Australian dollar to US dollar may trade within a defined range even though the Federal Reserve appears to be on track to implement higher US interest rates over the coming months. But the tilt in retail sentiment looks poised to persist as retail traders have been net long the pair since November. The IG Client Sentiment Report shows 53.38% of traders are currently net long Australian dollar to US dollar, with the ratio of traders long to short standing at 1.14 to 1. The number of traders net long is 6.04% higher than yesterday, and 4.19% higher from last week, while the number of traders net short is 22.59% higher than yesterday, and 20.18% higher from last week. The rise in net long position comes as Australian dollar to US dollar fails to extend the series of lower highs and lows from the previous week, while the jump in net short position has helped to alleviate the crowding behavior as 62.75% of traders were net long the pair in mid-December. With that said, Australian dollar to US dollar may face a further decline over the coming days if it fails to defend the opening range for January, and the exchange rate may exhibit a bearish trend in 2022 amid the diverging paths between the RBA and Federal Open Market Committee. Source: Trading View. Written by David Song, currency strategist. Follow me on Twitter at DavidJSong.